Good day Forex trader. Your USD Forex signal, consolidation continues. Today's your USD signals. Risk 0.75%. Trades must be taken prior to 5 p.m. London time today only. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame. Immediately upon the next touch of $1.1302, $1.1307 or $1.1327. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1267 or $1.1229. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD Analysis. I wrote last Thursday that we were seeing a lack of direction and volatility in this currency pair, but that we may get a bullish bounce at the support level, very confluent with a round number, at $1.1301, so a scalp from that price if reached could be a nice trade opportunity for the day. I also thought that the price would be extremely unlikely to break above $1.1400. I was wrong about $1.1301, which did not give a good opportunity, and we also saw increasing volatility and directional movement over the day. The picture now is very consolidative, with the price moving less in this currency pair than in most others. This is mostly because we have major releases from the central banks of both currencies due tomorrow, Federal Reserve, and Thursday, European Central Bank, and markets are just waiting for these. It is very likely that the price will not move much today, so the only opportunity one see here is for scalpers who may try to scalp long from the support level at $1.1267. The price is close to this level at the time of writing. There may also be a short scalp opportunity later at the resistance confluent with the round number at $1.1300 if it is reached. Gbp Usd Forex signal, range-bound with bearish bias. The pair will likely remain in this range today after the UK jobs and US PPI data because investors are focused on the upcoming Fed and BOE decisions. Bearish view. Sell the Gbp USD and add a take profit at 1.3150. Add a stop loss at 1.3300. Timeline, 1 day. Bullish view. Set a buy stop at 1.3250 and a take profit at 1.3350. Add a stop loss at 1.3150. The Gbp USD pair was little changed on Tuesday morning ahead of the latest UK employment and US Producer Price Index, PPI, data. The pair is trading at 1.3230, where it has been in the past few days. UK employment and US PPI data. The biggest catalyst for the Gbp USD on Tuesday will be the latest UK jobs numbers that will come in the morning session. Economists polled by Reuters expect the data to show that the country's unemployment rate declined from 4.3% in September to 4.2% in October. The rate has declined gradually from a pandemic-era high of 5.1%. It has also declined in the past 4 straight months. Analysts also expect that the average earnings without bonus fell from 4.9% in September to 4% in October. With bonuses included, wages rose by 4.6%. These numbers will come a few days after the UK published relatively weak GDP and manufacturing output numbers. Most importantly, they will come a day ahead of the upcoming UK inflation numbers. The data are expected to show that prices surged in November as energy prices rose and supply chain disruptions rose. Also, the numbers will come 2 days ahead of the latest Bank of England interest rate decision. The next key catalyst for the GBP USD pair will be the latest Producer Price Index, PPI, data. The factory gate prices are expected to have risen from 8.6% in October to 9.2% in November. The core PPI, which excludes the volatile food and energy prices, is expected to have risen from 6.8% to 7.2%. These numbers will come a few days after the US published strong consumer inflation data and a day ahead of the latest FOMC interest rate decision. Gbp Usd Forecast. The Gbp USD pair has been in a tight range in the past few days. The pair is trading at 1.3230, which is slightly below Monday's high of 1.3260. On the 4-hour chart, the pair is trading at the same level as the 25-period and 50-period moving averages. The MACD has formed a bullish divergence pattern. Therefore, the pair will likely remain in this range today after the UK jobs and US PPI data because investors are focused on the upcoming Fed and BOE decisions. Aud USD Forex signal, double top points to more weakness. The pair will likely keep falling as investors wait for the upcoming FOMC decision. Bearish view. Set a sell stop at 0.7100 and a take profit at 0.7020. Add a stop loss at 0.7180. Timeline, 1 day. Bullish view. Set a buy stop at 0.7150 and a take profit at 0.7250. Add a stop loss at 0.7100. The AUD-USD pair retreated on Tuesday morning as focus remained on the rising American inflation and the upcoming interest rate decision by the Federal Reserve. The pair is trading at 0.7120, which is slightly below last Friday's high of 0.7190. US inflation and FOMC decision. The Australian economic calendar and political events are relatively muted this week. Besides, the Reserve Bank of Australia, RBA, has already delivered its final interest rate decision of the year. Therefore, for the AUD-USD pair, the focus remains on the United States. On Friday, the US published strong inflation numbers. The headline CPI jumped to a multi-decade high of 6.8% in November as the supply chain disruptions continued and energy prices rose. These numbers came exactly a week after data from the US showed that the country's unemployment rate declined to a pandemic-era low of 4.2%. The next key catalyst for the AUD-USD pair will be the upcoming US Producer Price Index, PPI, that will come out on Tuesday. Economists expect that the data will show that the headline PPI jumped to a multi-decade high of 9.2% in November this year. The core PPI, which excludes the volatile food and energy prices, rose to 7.2%. Still, while the US inflation is rising, some analysts believe that it is peaking. The pair will next react to the latest interest rate decision by the Federal Open Market Committee, FOMC, interest rate decision that starts today. The bank will deliver its last decision of the month on Wednesday. Analysts expect that Federal Reserve will move more quickly to unwind its pandemic response tools. This means that it will continue tapering its asset purchases and then hint about future interest rate hikes. The Fed chair has already hinted about future tightening by backing down his previous assessment that inflation was transitory. AUD-USD Forecast. The 4-hour chart shows that the AUD-USD pair is trading at 0.7120. This price is slightly below the double top at 0.7183. The price is also slightly below the 23.6% Fibonacci retracement level and the 25-day moving average. It is also along the standard pivot point while the Relative Strength Index, RSI, has turned lower. Therefore, the pair will likely keep falling as investors wait for the upcoming FOMC decision. If this happens, the next key support to watch will be at 0.7050.